Bitcoin, again, pulling off yesterday's high. But look at this chart. This is why I use charts in every day. I had a long and verified investing crypto in Bitcoin. You know where we unloaded it? We unloaded it right into this trend line here. Look at how this trend line has caused price to pull back every time. And so again, the thought process here is, well, don't try to reinvent the wheel. Just follow the freaking charts. So yesterday we unloaded just above 26,000 our Bitcoin position, and it's pulled back since then. Now, again, part of that was also a 3-bar surge. We know that in trading, when you have 3 mega green candles to the upside or 3 mega green candles to the downside, in general, you get a bounce or a pullback. In this case, when it's a sharp move up, you get a pullback to the downside. So right here, this was resistance on Bitcoin. Now, Bitcoin's hanging in there today in spite of a stronger dollar. Now, that's kind of weird. Why is Bitcoin up when the dollar is surging? The answer is so simple, and it's so poetic for why I like Bitcoin long term. Shorter term, I still think we're going lower. You know, that hasn't changed. 12 to 13,000 first target, maybe 9,000 second target. But on the longer term basis, what we're seeing today, what we're seeing for the last week is exactly why Bitcoin was invented, why it came to fruition. It's because when you have this craziness in the system, when you have scenarios where the government has to come in and backstop deposits, when you have all this stuff because these banks are not doing and following the rules, or essentially they're not managing their own risk, you know what is okay? Bitcoin. Think about how investors are selling banks and actually buying Bitcoin. This should be the most freaking exciting thing to any of us that we're seeing out there, to see this occurring. Because this shows you that there is an alternative, that for some of us, yeah, I have most of my money in banks, for absolutely. But again, am I looking at Bitcoin as a long-term potential to offset risk in the banks, to offset risks of printing of money? Absolutely. And that is why what you're seeing in this latest crisis is why Bitcoin will survive, in my opinion, and will thrive down the line. Now, granted, it's got to go through growing pains. We know that. It's only really 14 years old. Bitcoin is a baby, basically a teenager at this point. So what's going to happen here? For me on Bitcoin, I think you're going to pull back to this line right here. You might get a little bit of a bounce. Then I ultimately think you'll retest down here and eventually break lower. I still think, again, this 18,000 and change level will be meteoric support. I plan to buy some Bitcoin off that level. There's another level here to look at. Take a look at this. If we put a trend line in right here and we put it from this low and just curl it up, look at where that line coordinates. Right at the 18,000-ish level, 18.2. So to me, when you have a confluence, when you have 2 or more trend lines converging, and if price comes in there, that is a huge level of support. Ethereum, I put this alert out yesterday. In fact, we shorted it yesterday in verified investing crypto. Resistance. Guess what happened yesterday? Resistance. We're in the money on our short in verifiedinvestingcrypto.com. So again, not a lot in the money, but nonetheless, just following the charts. While everyone else was talking major breakout new bull market yesterday, we just simply sold our Bitcoin into resistance and we shorted Ethereum. Very simple. I don't try to invent the wheel. I let the charts talk to me. Essentially, looking at this chart, when I first started, 20 plus years ago, it was a foreign language to me. I was like, what the heck, man? It just looks like a bunch of weird ups and downs and reds and greens. Heck, it looks like a Christmas tree. But you know what? When you learn the language of the chart, it speaks to you. It doesn't tell you what 100% is going to happen. It tells you what the probability, a high probability scenario is. All right, next up, let's take a look at the dollar. I want to take a look at the dollar today. We know that the PPI data just came out. The dollar is getting a pop today. Look at this. Now, why is the dollar getting a pop when inflation's coming down? The answer is very, very simple. The dollar is getting a pop. It's ignoring the PPI data. Instead, you know what it's doing? It's looking at the craziness in Europe. When people get panicked, when they get so fearful, do you know what they do? They buy US dollars and they also buy gold. All right, that's what people run to. So it has nothing to do, in a normal scenario, if the banking mess in Europe wasn't going on, if the banking mess in the US wasn't going on, you know what they would do? They would be probably selling the dollar on the PPI data. But because of this, because of the issues here, people are running to the safety of the dollar, and that also is not a good thing for the US markets. All right, let's go to gold. I know you guys are waiting on gold. Gold is ripping higher today. Beautiful move to the upside. And look at this move here. Guess where we're headed, guys? All right, look at this chart. You have your up move for 2 years from 2018 to 2020. You have sideways consolidation. I still remember when we were trading down here, everyone was like, oh, Gareth's insane. gold stinks, da 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 da. Yet it was still the best performing asset between the S&P 500 as well as Bitcoin. And then look at the run it's gone on here. This was my prediction: is that when the Fed finally gets to a point where they have to pause because things get so messy in the economy, you know what's going to happen? We're going to see gold rip. Now, gold is going to have resistance coming up at this upper trend line around $1,955. That's normal. It's going to have a pause, a pullback, and then it's going to bust through and break out. And then you know where it's going to go? It's going to go to your double top high right here. All right? Like, think about this, guys. You just saw the Fed in basically 1 year raise interest rates from essentially 0 to 5%. All right? How does anyone not think that's going to not break the system? And this is something I've said for a long time. I've gone nuts on this. I've said that you essentially have a scenario where the market and investors got addicted like a drug addict to their drug dealer. The Fed was always saving the day. They were always coming in and basically, giving us more drugs in terms of quantitative easing and cheap money. So the fact is, when you go cold turkey, what the heck do you think is going to happen? And I said this a year ago. I said this a year and a half ago. I said the system would break. I said, be ready for black swan events. They're going to come. And here we are today with the banking sector a mess. Europe is now a mess. We're seeing, again, the banks in Europe getting absolutely annihilated today. Now, in all fairness, is it the Fed's fault that we're in this predicament? Partially, yes. And the reason I say partially yes is because they said transitory, right? We remember that word, transitory. Inflation's going to be transitory. There's no need to really jump on and start raising rates yet because it's going to be transitory inflation. They were wrong. They had to play catch up, which means they had to jack rates up in a short amount of time, insane amounts. And remember, we're not just talking about going from 0.25% to 5%-ish. We're talking about the rate of change, how quickly it happened, and we're talking about how many hundreds of percentage points that was an increase from 0.25 to where we currently are. Now, in all fairness, banks like Silicon Valley, they deserve a lot of blame too. These guys are probably getting paid millions of dollars. This type of money, you better be damn sure you understand the risks when you see the Fed raising rates. So they're not innocent here either. You know who's innocent? The retail investor that's gotten caught off guard in this stuff. Now, if you've been following my chart analysis, if you've been following everything I'm doing, generally you're prepared for this. We knew this was coming. We had lots of shorts in themoneystocks.com's portfolio going into this action. All right, we had crypto shorts just before this latest dip. Then we went long crypto in verified investing crypto just going into this latest bounce. So again, we've been prepared because we're swing traders.